Again, why does everything cost more? Because the government spends more. But they didn't raise taxes to pay for that spending because the government didn't want the voters to know that all the stuff they were getting from government, they had to pay for. They wanted to pretend they could get it for nothing or that somehow the rich would pay for it. But the rich aren't paying for it. The middle class and the working poor are paying for it, but they're not paying for it honestly through increased legitimate taxes. They are paying for it dishonestly through the inflation tax. But the main reason the government loves to pay for stuff with the inflation tax is because it never accepts responsibility for levying that tax. Instead, it blames it on other factors like greedy businessmen gouging their customers, or Vladimir Putin, or OPEC, or any other convenient scapegoat. And then what does government do? Government says, oh, now we need more laws and more regulations to protect the public from inflation. Government is the source of all this inflation, yet the government uses the inflation it creates as a springboard to even more government power. This is Black Friday, the day that officially kicks off the holiday shopping season, where Americans are supposed to go out and buy stuff. And this is considered economic activity in the United States. The fact that we go out and buy things, most of the stuff that Americans buy for Christmas, we didn't make. All this stuff is imported. And so it's only possible because of the economic growth outside the United States, not inside the United States. All we're doing is creating money, and we're exporting our inflation to the rest of the world in exchange for their goods. I mentioned about the holiday Black Friday, where Americans are out there shopping. The problem with Americans is we're consuming and not producing, and nowhere is that more evident than when you look at the ports. Because I mentioned that one of the things that Dubai has as an economic advantage is where it's located, and they're able to have a port. They have several ports, but their largest port is the 11th largest port in the world. And the reason that this port does so much business, it's not that Dubai is manufacturing so much stuff that it's exporting. What Dubai does is it imports and then re-exports a lot of stuff because of how efficiently it operates and because of the lack of duties. For example, they import a lot of coffee and tea that are grown all around the world, not grown here in Dubai, but they import the coffee and tea and then they package it up and then they re-export it to other places all around the world. But I thought I would take a look just to put this in perspective when it comes to ports. Of the top 10 ports in the world, China has the number one port, and it has 6 of the top 10 ports in the world. And it has 16 of the top 50 ports. The top port in the United States ranks number 17, and America only has 4 of the top 50 ports. Yes, the population of China is a little over 4 times greater than the population of the United States. And so they roughly have 4 times the number of ports that we have in the top 50, but they have 6 ports in the top 10, and we don't even have 1. Plus, even though China has a huge population, the per capita income in America dwarfs the per capita income in China. You would expect a lot more ports in proportion to the population here in the United States than they have in China. And that's not true. And the main problem is when it comes to ports in America, it's one-way traffic because stuff comes in, but the containers leave empty. And so there's a lot of trade that doesn't take place. Whereas in China, not only does China import a lot, but it exports a lot. And so the volume of the trade is much greater. But if you think about what Dubai has achieved by having the number 11 port in the world, 6 notches above the largest port in the United States, is that the entire population of the United Arab Emirates, so this is not just Dubai, it's Abu Dhabi and all the other Emirates combined, the total population is just 10 million people. Yet those 10 million people have the number 11 port in the world. The United States is 30 times larger than the Emirates. So on a per capita basis, the people living here in the Emirates, particularly in Dubai, dramatically outtrade the people in the United States. And why are the people living here so much more productive than the people living in the United States? Because they have a lot less government regulation and taxation getting in their way. And so the result of that is incredible prosperity. So if you do have a business or you want to start one and you're looking for a place to relocate, I think you should take a look at what's happening here in the DMCC. I relocated my business and my family to Puerto Rico, but I think the Emirates offers a far more attractive package than what's available in Puerto Rico. The problem, though, for Americans is that while people from pretty much every other country in the world can move to Dubai without having to renounce their citizenship and enjoy all of the benefits of zero taxes, Americans cannot take advantage of the same opportunity because of the American citizenship. Even if Americans relocate to Dubai and are free from local personal and corporate income taxes, they still are responsible for paying U.S. income taxes, even though they're not working or living in the United States. That's why, from my perspective, my opportunities were dramatically limited. I couldn't consider Dubai and still keep my U.S. citizenship. So I'm living in Puerto Rico. But Puerto Rico would have a much more vibrant economy with a much higher standard of living for everybody if overall Puerto Ricans enjoyed the same type of economic freedom as the people living here in Dubai. Now, of course, Puerto Rico is a democracy. The Puerto Ricans get to go to the polls and vote for their leaders, something that doesn't happen in Dubai. But therein lies the problem. Because Puerto Rican politicians have to constantly get reelected, the whole system is very corrupt. And you have to fool the voters into voting for you. So you have to do all sorts of foolish things in order to get elected because voters don't realize how foolish the things they are voting for are. So whenever the Fed talks about how they have to raise rates more, how they have to raise them quicker, or how they have to raise them higher, well, that is hawkish. And what the stock market is looking for is any signs of dovishness, even if they already expect those signs. Just confirmation is what the markets react to. Maybe a lot of it is program trading and algorithms where they're looking for these key words. And the minute they think, oh, rates are going to rise a little bit less than we thought, because many people on the Federal Open Market Committee were talking about the need to slow down and to reassess, and that maybe we can't keep hiking interest rates by 75 basis points at a clip. Maybe we should move a little slower and give the markets a little more time to react to the hikes that we've already put in place, acknowledging the fact that there's a lag. So whenever the markets get that type of rhetoric from the Fed, the traders seize on it. And that's why you had the rally in the stock market. But more important than the reaction in the stock market is the reaction in the currency market. The dollar got hit hard on Wednesday. And in fact, it's falling again here on Friday morning. The dollar index is back with a 105 handle. It's 105.85, getting very close to falling below 105. I think a close below 105 would be technically significant, although I'm not really sure we even need that at this point. I think we have enough evidence to say that the high in the dollar is in. The dollar index almost got to 115, and now we're back below 106. So that is a significant decline. And I expect the decline to accelerate, especially after we close below 105. Then I think we could really start seeing a weakening dollar, which again is going to be very problematic for the Fed because the weakening dollar is going to put more upward pressure on inflation. And ironically, of course, the reason the dollar is weakening is because the markets think that the Fed is winning its fight against inflation. And so it won't have to fight as hard in the future. And that is removing the supports from beneath the dollar, causing the dollar to tank. And now the very inflation that the markets thought the Fed was making progress in fighting is actually going to get worse. So the Fed will be a victim of its own success when it comes to inflation. But when the markets perceive this, I think it's really going to accelerate the movement out of US dollars and into alternatives. In fact, if you look at what's happening in the stock market itself, it's exactly what I've been forecasting with respect to the continued rotation out of momentum into value. I've been repeatedly saying that this next move up in the stock market is not going to be led by the leadership of the bubble, that these tech stocks, companies that don't earn any money, are not going to be leading the way. It's going to be value, it's going to be dividend oriented stocks that are going to be the leaders in the next move up in the market. And in fact, not all stocks are going to move up. A lot of these money losing companies are going to go down in an environment of high and rising inflation and rising long term interest rates. But if you really want to look at some outperformance, look at the gold and silver mining stocks. The GDX is up 33.4% from its September low. The GDXJ, the junior mining stocks, is doing even better. That index is up 38.3% from its September low. And remember, these are the closes as of Wednesday. I don't know what they're going to do in today's session, but these are pretty big moves. In fact, these indexes are now at 5-month highs. You got to go all the way back to June to see these indexes trading at this level. And I think what's very technically significant is the fact that these indexes have taken out the August highs. And I think there's a long way to go. This really is a stealth bull market in these mining stocks. Nobody is talking about a near 40% move up in junior gold mining stocks. Sure, a lot of people are pointing to the move up in the NASDAQ, which is a third of this move. This move is happening in obscurity, which, as far as I'm concerned, is great for the bulls. I don't want anybody talking about the rally in gold stocks. I don't want anybody buying gold stocks. I think what's probably going to happen is gold stocks are going to double, maybe triple off their lows before the mainstream media even starts talking about the rise. And of course, when they start talking about it, they may look at it skeptically. It may take an even bigger increase before they get on board. But that's why I recommend that people not wait for investing in gold stocks to become all the rage. Invest in this sector long before then, because that's when you can buy the stocks cheap. Because in order to buy something cheap, you can't be in competition with a lot of other people, because when you have lots of buyers, they bid up the price and then the price isn't cheap.